Well, fun fact, the average person watches my video for 27 seconds. So that doesn't hurt my feelings, not really, but I do want you to know if you pay taxes, this video most likely applies to you. So let's just jump into it. Well, it's probably already been 27 seconds, so thank you. But I want to talk about the recent bill, part of that big, beautiful bill that they just pushed through the House, and now it's in the hands of the Senate. So obviously this is still subject to change, but I want to talk about some personal income tax changes that are in this bill and how they may impact you. So I'm going to try to rattle off 9 of them very quick, and we'll take a look at each of them. So the first one is just a general statement. You know, the Tax Cuts and Jobs Act reform of 2017 during Trump's first term. If you remember, there was a tax cut back then that was supposed to expire at the end of 2025. Now they're just extending it. So the same tax brackets that we've had for a while, 10, 12, 22, 24, 32, 35, 37, those will still exist. There was some talk of a new one, 39.6 for earners of over $1 million. Somewhat unsurprisingly, that did not make the final bill that went through the House. So Tax Cuts and Jobs Act in general was extended. Moving on to item number 2. I'll start with kind of just a quick one that probably impacts most of us. So standard deduction. If you remember, for a single filer, that's somewhere around that $15,000 mark of a standard deduction you get. If you are married filing joint, it's $30,000. So that has been increased to $16,000 for single and $32,000 for married filing joint. Also, if you're 65 and older, it's important to note, there already was an additional either $2,000 deduction that you get for filing single, or up to $3,200 filing joint. That's been increased by $4,000 a person. So an extra $4,000 for a single filer, an extra $8,000 for married filing joint. So that one is basically subject to some income phase outs. All of the standard deduction items are supposed to go away at this point at the end of 2028. Item number 3, child tax credit. This was a $2,000 credit, some of which would be refundable, some of which is not refundable, but that was supposed to go back down to $1,000 when the Tax Cuts and Jobs Act rules expired. But now it's going up to $2,500, which is set to go back to $2,000 after 2028. Item number 4 is the SALT cap increase, state and local taxes. Used to be $10,000. Now that is supposed to go up to $30,000. In that case, you'd want to be tracking those a little bit more closely. That also has an AGI phase out range for certain income levels. So important to note that as well. Item number 5 is an adjustment to the amount that you're able to deduct when you're in the 37% tax bracket. So long story short, if you're in the 37% income tax bracket, this is designed to sort of make it so that your itemized deductions aren't reducing the amount that you owe 37% on. You're only saving roughly 35% on those. Item number 6, no tax on tips and overtime. Still shows up as income. It is a below the line deduction that you get later for any of the tips or overtime pay you receive. So it can still factor into your AGI and other things like that, but you do get the deduction for your tips and overtime. Item number 7, the ability to deduct auto loan interest on auto loans taken out since the beginning of 2025. So up to $10,000 of interest can be deductible. There is a income phase out there. So if you're single, making over $100,000, or married filing joint with over $200,000 of modified adjusted gross income, you will get phased out of that deduction over the next $50,000 of modified adjusted gross income. Item number 8 is the estate tax exemption. As you know, when you pass away at the federal level, currently in 2025, you get something like $14 million that you can pass on to future generations or your heirs. without paying estate tax. That's per spouse. That estate tax exemption is now $15 million going forward. It was set to go back to a much lower number, closer to that $7 million range. So this is an increase as opposed to what would have happened had they not passed a new bill. So estate tax exemption, $15 million per spouse. Item number 9, the last one, doubling the HSA contribution limit. So it used to be $4,300 for an individual or $8,550 for a family. Now with that being doubled, obviously the numbers are twice that of $8,600 and $17,100. So that second piece, so the first half you get no matter what. The second half, however, is subject to a modified adjusted gross income phase out. So that's the 9 items. Obviously, there's a whole bunch more in here. As it's written, it's still in the hands of the Senate. A lot of this can change, but qualified opportunity zones being extended, qualified business income deduction, the QBI deduction, some changes to that, which might allow you to have a somewhat larger deduction if you're in some phase out range. I might make a separate video on that. And then you probably heard of some of these other things that are eliminated, which are, clean energy vehicle credits or putting solar panels on your roof and getting a deduction for that, things like that. So if you're looking to purchase an electric vehicle or solar panels, you might want to keep an eye on this bill to see where things end up. So that's the 9 items. Appreciate you watching. If you have any questions, feel free to reach out. We're here for you, and we'll talk to you soon. Have a great week.